All right, let's dive into one of the absolute giants of the IT world, Tata Consultancy Services, or TCS. Now, they're making a huge, and I mean huge, push into artificial intelligence, basically staking their future on it. So the big question we've got to ask is, does their latest financial report actually back up that massive vision? Let's get into it. So yeah, this is really the heart of the matter. We're going to put the exciting AI hype right next to the cold, hard numbers. Is TCS really building this incredible AI-powered future they keep talking about? Or, are the realities of the market telling a slightly different story? Let's find out. Okay, first things first, let's unpack what this big bet on AI actually means. For TCS, this isn't just about launching a cool new app or service. Nope, we're talking about a fundamental rebuild of their entire business. And you can see just how serious they are about this. It's a whole 5-point plan. They're starting from the inside out, changing how they work, completely redefining their services, trading their people for the future, and then taking all of that to their clients. This isn't just a fresh coat of paint. It's a total overhaul. And it's not just talk. This strategy is actually getting some serious traction. Right now, TCS is juggling around 5,000 active AI projects. Think about that. Those aren't just little experiments, that's a huge number, and it shows that clients are really buying into what TCS is selling. Of course, you can have the best strategy in the world, but it means nothing if you don't have the people to pull it off, right? Well, that's why TCS has trained up over 180,000 of its employees with advanced AI skills. That is a massive investment in their own team, and a huge signal that they're playing the long game here. And now for the part we've all been waiting for, let's talk about the money. Their yearly revenue from just AI services just crossed $2.3 billion. But here's the kicker. That number is up nearly 28% from the last quarter alone. AI now accounts for almost 8% of their total revenue. So the big takeaway? This AI bet isn't some far-off dream. It's already making them some serious cash. Okay, so the AI picture looks pretty rosy. But what about the rest of the business? Let's pivot to their latest quarterly earnings and see how the company is performing as a whole. So looking at the big picture numbers, TCS delivered a really solid quarter. Sales are up 10% from last year, profits are up 12%, pretty much exactly what the analysts on Wall Street were predicting. So no nasty surprises here, just steady, solid growth. So where is all this money coming from? Well, no surprise, North America is still the king, making up almost half of their entire business. The UK is also a really strong spot for them, pulling in over 17%. It's this kind of global spread that really gives them their stability. Now, this is where it gets really interesting. If you break it down by industry, you can see who's spending. The energy and utility sector is absolutely on fire, growing over 6.5% in just 3 months. But take a look at the banking and financial services slice, BFSI. It was almost flat. And since that's their biggest customer group, that little bit of sluggishness is definitely something to keep an eye on. Okay, so current revenue is one thing. But for a company like TCS, what's arguably even more important is what's coming down the pipeline. And that is all about their deal wins. Get this, in just the last 3 months, TCS locked in a massive $12 billion in new contracts. You can think of that as their pipeline for future work, and it's one of the best ways to tell if the company is healthy and growing. Now, that $12 billion number sounds huge, and it is. But let's put it in perspective. This chart shows that the end of the year is usually a great time for them to sign big deals, and this quarter's performance fits that pattern perfectly. It's a really strong finish to their fiscal year and shows that companies are still eager to sign on the dotted line. So what do we have? We've got a supercharged AI engine, solid overall financials, but maybe a little softness in some key areas. What does it all mean for the stock? Well, let's see what the experts at Prabhudas Lilladher think. This quote just nails it. They're saying, look, the last quarter was good. It was exactly what we expected. But when they try to look ahead into next year, things get a little blurry. There are some global headwinds, some clients are being a bit more cautious with their spending, and that makes the future a little harder to predict. But even with that bit of uncertainty, here's the bottom line from the analysts. They're still rating the stock a buy, and they've set a price target of 3,450 rupees a share, which means they think there's still room for the stock to climb. And this chart really helps you visualize that. You can see the stock's journey over the last few years and where that 3,450 rupee price target sits compared to where the stock is today. It shows they really believe the company's long-term strategy, especially in AI, is going to pay off for investors.
Which brings us right back to where we started. TCS is, without a doubt, building a powerful AI machine, but they're also navigating a pretty tricky market at the moment. The real challenge, the billion-dollar question, is whether they can steer through these short-term choppy waters to turn that incredible AI vision into real, lasting value. What do you think is going to happen?